The US stock market is shifting focus away from corporate reports. Investors are getting more careful and restrained. Today, the benchmark stock indexes went up quietly in the New York pre-market. The season of corporate reports is coming to an end. More Fed policymakers are due to make their comments later today. Thus, market sentiment will depend on their rhetoric. You're watching a daily review of the US financial markets with me, Ekaterina Stikhina. Futures on the US stock indexes added 0.1 and 0.4% before the opening bell. The S&P 500 is expected to trade in the intraday corridor between 4,936 and 4,508 points. The S&P 500 closed with a modest growth yesterday. Top American companies provided mixed corporate reports, and the market also digested comments from Fed policymakers searching for clues for the first rate cut. Minneapolis Fed President Neel Kashkari said the central bank is not done with inflation, although he noted it has fallen quickly with the 3 and 6 months inflation data, mostly in line with the Fed's 2% target. In addition, Cleveland Fed President Loretta Mester said that if the U.S. economy performs as expected, it could open the door to a rate cut. But Mester said she was not yet ready to propose the timeline for policy easing due to the inflation uncertainty. Dovish comments from the policymakers supported the stock indexes on a Wednesday. Earnings reported by U.S. companies fit a picture of a steady and even accelerating economic growth. More than 80% of S&P companies beat forecasts, and the overall 3 months annual earnings growth was 8.1%, nearly double what was expected just a month ago. Treasuries came under moderate pressure on a Wednesday after comments from Federal Reserve officials could not change expectations about the outlook for monetary policy. The US dollar is pulling back from its highs against major rival currencies. Its index shot nearly 0.2% in the early North American session to trade at 104 points. The intraday corridor for the index is seen between 103 and 80 and 104.50. The greenback fell today, retracing from its 3 months high against the euro. At the same time, declining yields of the US Treasuries are also putting pressure on the US currency. Analysts point to poorly technical factors contributing to the dollar's pullback after a two-day rally of as much as 1.4% against the euro. Globally, the dollar's outlook remains bullish. Fed policymakers express hawkish rhetoric and are likely to keep interest rates unchanged in March. Indeed, the US economy is on a sound footing. That's why the medium-term prospects for the dollar look much better than those of its major peers. The Canadian dollar is certainly taking advantage of the greenback's retracement. The USD-CAD pair slipped by 0.19% to trade at 1.3466 in the early New York session. The intraday corridor is defined between 1.3439 and 1.3510. Bank of Canada Governor Tiff Macklem said on Tuesday that monetary policy needs more time to ease inflationary pressure. We see that monetary policy is working to bring down inflation, and we need to give it more time to ease remaining price pressures, the bank's chief said. Macklem also noted that the central bank cannot ignore housing costs, which are driven in part by high interest rates, and that the goal is to reduce overall consumer price inflation. Later today, the dynamics of the loonie may be affected by the Bank of Canada minutes, which will be published after the opening bell. The crypto market today is trading sluggishly and without much change. Popular digital assets are following different trajectories. Bitcoin is trying to settle above $43,000. At the time of recording this video, the coin was trading 0.08% lower at 43,100. Considering that Bitcoin is draped sideways, our analysts suggest the basic intraday corridor between $42,000 and $43,400. The next support levels are $41,700 and $40,000. Resistance levels are found at $43,700 and $44,300. Our review of American markets is over. Subscribe to InstaForex TV channel and we will keep you updated on the daily market developments. Financial markets offer ample trading opportunities, so see you online tomorrow.